This now is David Gandler, Fubo co-founder and CEO. He's going to continue to lead the newly combined company. David, good to see you. So when you and I last
thank you for having me.
Great to have you back. When we last spoke back in August, you were suing Disney and its partners over venues, saying it was anti-competitive, deprived consumers of choice. Now, under this deal, Disney is beefing up Fubo, becoming a majority owner in the company you'll be running. So how does this fix those issues?
Well, I think the combined company, first of all, will have about 6.2 million customers. And as you said, it will be the second largest virtual MVPD in the space. And for me, that's an important moment because it significantly intensifies the competition in the space. And we'll be able to, negotiate deals together, get better pricing, more packaging flexibility, and that ultimately helps consumers. And, as part of our deal, we've amended our carriage agreements, which allow us to launch skinnier bundles to attract customers that are more price sensitive and looking for greater value.
And what will the capital being injected into this venture do for you?
So, as you know, we've gone from being an upstart, should this deal go through, as part of the signing, we've had a cash injection of about $220 million and a term loan of $145 million. So that gives us significant capital to continue, to march towards our growth plan. And I think together, we'll be able to really focus on three areas. One is sort of the content cost, advertising optimization, there's marketing efficiencies, and, we'll look to leverage, Disney's resources and support, to help us grow our business and compete vigorously in space.
David, it's Morgan. It's great to have you on the heels of this news. As John just mentioned, your stock finishing up 250%. It just surged. Investors are certainly wrapping their arms around this and seem to be very excited. But I am curious, if we take a step back, how did this deal actually come together?
I get this question a lot. Look, as I've always said, our goal has always been to provide value for all of the stakeholders in our industry. And we've said that was for shareholders, for our media partners, and obviously for our customers. And, we initiated, I personally initiated, I thought it was a good idea. And, I think that, given where Hulu Live is and, what Disney was doing with it, I think it made a lot of sense. And, the key, I think, for the industry right now is to look for ways to continue to monetize programming. And I think this is, again, it's an important deal. It certainly changes the landscape. It's more competitive. And the big winner today, I think, is the consumer.
How does it speak to how quickly the media landscape is changing and evolving here right now, especially as you start to see things like, we're even experiencing it. Comcast, our parent company with SpinCo. You're seeing it with other deals happening among more traditional media companies as well. But even just tonight, you have Netflix broadcasting its first WWE Raw episode as well. So how does it speak to what we're seeing in terms of cord cutting, in terms of cord nevers, and in terms of this TV 2.0, I'll call it, landscape?
Yeah, look, I think you're right. It's a very complicated space. The dynamics are quickly changing. Everyone's looking to try and reposition themselves for success to be able to attract more customers. We've been very focused on super aggregation. It's an area that I've talked about several times now over the last year. We want to be able to provide consumers with different price point video services along the demand curve. And we want to provide them that flexibility. And I think everyone, including Netflix, is looking for ways to ensure that they remain at the top. As it relates to Disney and our relationship, I think that, what we're able to do right now is to offer two very distinct brands. One is Hulu, which will provide a more fulsome entertainment cable replacement service, which obviously has sports, news, and entertainment. And Fubo will continue to double down on its sports offering. And now with these amended carriage agreements, we'll also be able to afford consumers, skinnier sports bundles. So we're very excited about this. I think you'll continue to see significant competition. But what you learned today and what we were able to secure today, I think, is really important as it relates to consumer choice, affordability, and value.